Alright guys, so I'm mainly just going to be showing you kind of the stock side of things. Um, I already put it on an Excel sheet, so I kind of just want to go through with you and kind of just show you what all this is about. Because usually what you would see is, kind of something like this, right? Like buy price, sell price, profit, right? So in most cases, someone will buy something for 100 potentially, right? They sell it for 25. Um, in that case, it's just going to be So in that case, right, this person would have made a 25% profit, for example. So in this situation, someone had to buy something and then they also had to sell it. But in between the buy and sell, there things had to have gone their way, right? Whatever they were betting, it worked. There's also situations where, right, you buy and you don't necessarily sell for what you want, and in this case, you would lose money. So knowing this and basically kind of being in this paradigm for like the longest of time, I still trade sometimes. I still do the buying and selling, but I keep it to a very minimal. Um, but now it's like, imagine you didn't even have to do this and you could make profit, right? Imagine you wanted to buy something and the instant you bought it, it would make you money. So that's kind of where this comes in, right? So all I'm showing you is basically, this is the date that I bought whatever the security was. Um, the port just means like what platform I'm using. So I just use TD Thinkorswim. So I just label that using TD. And all strike is just the price of the stock where it's at. Um, and the expiration here, as we can see, we're going pretty far out. And again, we're just collecting premium. So this is all cash flow. Um, and then these are some of the commission slash regulatory fees. But even if you don't understand what's going on here, I think everybody here will understand what's going on here when we look at the ROI. So as we can see, we made 28% of our money, 48, 48, 48, 58. These are, I kind of just did some daily computations just to show you like the daily return on investment. And then this is showing you like the daily cash flow of that asset. In this case, right, this $50 generated me almost 30 bucks worth of premium, uh, and that's a pretty significant ROI. And again, these are the days till expiration from the day I bought them, right? So as we can see, a lot of days, but at any time I can close the contract. That's why you see the outcome. It says pending. Because right now I was able to make all these premiums and profits, but say for example the market does a huge reversal and it continues on its uptrend. There's a huge potential that I'll be able to lock in maybe not 58, 48% profits, but I'll be able to lock in and then free up that cash again to make more investments. I could potentially lock in like 10 to 20%. And again, hopefully I'm not losing anyone here, but all I'm just trying to show you is that with stocks, you can make cash flow that are not dividends. These are not dividends. This premium here is not a dividend. It was paid first day. I didn't have to wait months or quarters at a time. And the main thing here is that we're just acting as insurance guys, and that's really it, right? So people are afraid. The Hexo stock as of now is probably at around the 50-cent mark. I have done my research into the company. I personally think it's a pretty good asymmetric bet. It's been heavily oversold, and as you can see, right, I'm willing to buy it at that 50-cent mark, which is the strike, and they were willing to pay me almost $30 to buy it at 50 cents. So that's almost, look at that ROI. That's also can be considered what is it called, like downside protection. So it goes both ways, just so you know. Uh, the ROIs, you can look at it from a cash flow perspective or a downside perspective. It's really up to you. But in my case, right, I'm just focusing on making this collateral, this money, work for me. And when we add everything up, overall, the collateral comes to about, let's see, comes to about 500 bucks. And so far, I've been able to generate, and then the ROI on that, roughly 37%. for the year. So in this case, right, my money's just working for me. This capital generated some brand new cash. In most cases, right, what you do is you want to move this cash, and in my case, I convert, right, I convert it to crypto. In this case, stable coins. Because although, right, that might not seem like a lot, what happens is now this amount generates its own cash flow, which is going to be about 850, I think. So now it's like, you got to know that all I'm doing is, since there's stocks that I believe in and I've done my research, I've done my due diligence, I'm willing to place bets on them. But in these cases, instead of taking a bet that we have to take the chance of either winning or losing, when we place our bets, people are paying us instantly to take these bets that we want to take anyway. So in this case, right, all this profit would get converted into some sort of stable coin, and then that money would be working for us for the year as well, right, making almost $15, $16 for the year. Again, I plan to add more positions to this, but the main goal with the stock market, right, at least in my perspective, there's people who make money on both ways, right? They make money cash flowing it. They also make money trading it. I think both are great. I'm not here shitting on either one of them. I've done both. But for the consistent side of things, I think it's so important to focus mainly on cash flow, because when you start treating them more as, cash cows rather than, cows that you're going to buy and try to sell to someone else at a higher price, it makes the game just more stable and consistent, and it just makes it more manageable, at least in my opinion. Again, could be wrong. But in this case, we can see here that pretty good ROI, and our money's working for us, which is the most important thing. So hopefully I didn't lose anyone there. I'm going to wrap it up here, but this list will keep filling up, and as it does, I will give you more and more updates. But again, it's about using and creating cash flow any way you can, using whatever asset you have. There's always a way to make cash flow. You just got to find it out. All right, guys. I'm gonna mainly just be showing you how I like to kind of approach the market, right? Again, like I told you, I'm not much of a trader. I'm more of an asymmetric play type guy, and mainly just focused on cash flow. So I'm just showing you one of the particular investments I'm looking at next, going to be loading into. This is called Bach. It's a holding company. They've teamed up with MasterCard, which is huge. But as we can see, right, they hit a top of almost $60 per share, and right now they're around the $3 mark. This is a SPAC, so it was around the $10 mark for a while, and it's been heavily oversold. This is just the last 80 days. This is the last 30 days. As we can see, just been on a downturn. A lot of people are afraid, and that also just has to be in correlation with the overall markets falling. So a lot of people try to de-risk. A lot of people don't trust the company, or should I say, don't trust the stock. So now, when I see a situation like this where something's been so battered down, especially just look at this, right? That's where the opportunity is, right? We can even see here that on the RSI and on the MACD, these are just indicators that generate overbought and oversold signals, right? Not saying it's always right, but when stuff is oversold, it's usually the best time to buy. That's when the whales usually are buying stuff. They buy, here's a good quote for everybody to know. Be fearful when others are greedy, right? And that's the best example is here, right? We would have been fearful when everyone was greedy because everything was just blowing up here. But then when everyone becomes fearful like it is now, that's when you want to become greedy, because that's how the rich make their money, right? They don't make their money up here. They make their money down here and also before here, right? They were accumulating here. And as we can see, they definitely benefited on the way up. And again, now there's this whole other opportunity here to accumulate again. So it's like, okay, what does that mean? So in my case, we just saw the technicals. We can see here that it's pretty oversold. Let's see if there's a... in this case, I was able to come up with just these very quick, graphs. Here we can see that there's definitely some bullish momentum, and all that means is that investors are bringing up the price. But again, there's so much selling pressure here that I think it's still going to go down in the short term a little bit. But there was a significant bounce on Friday. It was up 5%, almost 6%. And that was because the overall market was also recovering, especially from the huge downturn it had. And for any of you who don't know what I'm talking about, just take a quick look here, literally at the NASDAQ. Here's a great example. This has been the NASDAQ the last 180 days. It's been a pretty insane drop for them for sure. Along with, let's see if I can show you any other ones. Where are you? Dow Jones, there you are. Dow Jones suffered pretty significant drop as well. It hit lower than, it almost hit where we were at in mid-June. So that's pretty significant, if you ask me. But again, I don't think the Fed's going to stop their money printing anytime soon. So I think naturally, as inflation continues and persists, even if they try to, you know what I'm saying, they're going to try to do their things with rates. I think potentially it will make it correct even further. It could potentially jump down into these ranges that we haven't seen since March of last year. But again, there's still a lot of stuff to be looking out for. Second to that, for people who don't know, most of this has been happening mainly just because of the strength of the dollar. I'm not going to show that graph, but as the dollar gets stronger, right, more people start pushing their money into cash or cash equivalents so that they can earn some sort of interest on it. But again, as the dollar rises along with the treasuries, we're going to see exactly where the market and how they react to that. But again, I'm just trying to show you, I'm the type of guy that instead of buying at tops, right, we're trying to buy bottoms of things. Again, you can't perfectly predict any bottom, but this is when you mix now some technical with some fundamental, which is what I do. I got two websites here. This is the one I pay for, so it kind of gives me some really concentrated data. In this case, we got high growth potential. It's unclear operations, and that's mainly because it's a SPAC, so it's relatively new. And very pessimistic investors, which is just showing you that, one, there's a lot of selling pressure, and two, there's a huge short percentage. So in this case, almost 13% are shorting this stock, which is pretty insane. Which means they still think it has room to go down, and it's already at 3. So again, I get excited when I see stuff like this. And lastly, we got here, it's underperformed the market, obviously, because it's just been, shat on. We can see here that the highest it's ever been was 50, and this is the lowest it's ever been, right? Again, opportunity. That's how I see it. And then here we have a nice little thing that shows us that it's an undervalued stock. And it says here that the average fair price is about $7. So this is some information that I'm not going to dig too deep into, but this is one of my sources. But here's another source that's completely free if you just sign up with an email. And you can use these too. You can research about any company. And what I love about them is they show some very great, they have a lot of great data here. So anyway, we've already looked at the technicals, so now the most fundamental. What are we looking for? We're looking for valuation, right? So this is when I come down here, and I can see here that according to, let's see, gotta keep going down, 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 down. So first of all, these are the earnings and growth revenue forecasts, right? So as we can see, when it comes to the revenue is just on a very clear projection upwards, and that's mainly because they deal with cryptocurrencies, transactions, things of that nature. And naturally, as cryptocurrency gets used more, this company will benefit from it for sure. We can see the earnings per share, right, has been going down, and that has to do mainly with their, if we go up here, mainly has to do with, where is it, right, earnings and revenue. So we can see here that their revenue, we got their cost of revenue, gross profits negative. They got plenty of expenses, what makes it even more negative. But in this case, this is a short-term play, right? Because what we're doing is we're betting on the fear of the people who are basically dumping this stock, because these numbers have been the same, right? And this is all I'm just trying to show you. As we can see, last reported earnings, this was the 9th, September 29th, 2001, which means people have had access to this information since then. So kind of to give you a really good overview, let's go to that date. Look at this, right? So this is when this thing was still a SPAC, when they were posting these numbers. And then as we can see, right, the market didn't necessarily like those numbers. They sold it down, sold it off to almost $8, almost 20%. And then what happened after that, right? They got in, and as we can see, it blew the hell up. So we're waiting on earnings for this guy. But just remember, right? This is kind of the picture that's in most of these people's heads. Again, now the valuation is very low, so it's only 3 times the price to book ratio. And again, as we keep scrolling down, we can see here huge emphasis on the future growth. Again, here are the revenue forecasts. These are forecasts in relation to the industry along with the market. As we can see, right, it's just it's been negative. Past performance, this is just the stock performance itself, so you can tell it's just been oversold like crazy. Return on equity, right, so in this case, it's been negative. But this is where I like to look at, right, so in the long term, they have plenty of assets. Very strong company in the long term in terms of what they hold on their balance sheet. They got almost 400 million of assets and only 30 something of liabilities. While in the short term, their liabilities do overcome their assets, which means the expenses in the short term are definitely going to eat up against their earnings and other things related to that. But for me, this is huge because this is the long term perspective, at least for me, right? Like in the long term, these assets and liabilities will eventually correctly find their value in the market. But right now, everything is just so oversold. And then as we can see here, when it comes to their equity, they got plenty of equity, and it doesn't seem like they're taking out any debts. So these liabilities could be, or at least they're not related to any sort of debt financing, which is pretty good. Again, I don't remember off the top of my head, but I would have to do a little bit further research into the liability side of things. But like for example, if you ever look at Chipotle's stuff, they have almost like $3 or $4 billion worth of liabilities, and it's not even debt; it's leasing obligations. So always make sure that you know what's going on in the short-term liabilities. But again, it clears it up here for us that it's not debt to a financial institution. So then as we come down here, they show the balance sheet, right? These are all, they got $28 million in physical assets, 24 million in cash and short-term investments, 13 million in receivables. They got, again, you can see right here, 30 million or 300 million in equity. So I'm liking this. I'm liking this a lot. And as we go down here, so I really like this website. Hopefully you guys do too. I think it has just a lot of really great information. But lastly here, what we like to see is kind of who's holding them. So we can see here that we got some, let's see who's holding it. We got Vanguard in here. We got Investco, Charles Schwab, right? Again, we can see that the bigger boys don't have too much of their money in this particular stock. But as we can see here, that's mainly because a lot of the general public, which in most cases is retail, got in. And that's why I really like this, because institutions, they're all loading up. All these people are loading up. These are kind of like the big boys, right? You got institutions, VC firms, and individual investors. These guys are whales. Anyway, but when you have 52% of the general public holding these stocks, look at this. How bad do you think the general public has gotten crushed, right? People were probably buying here and up here, you know what I'm saying? Now it's literally at $3. So in my perspective, right, looking at the company's kind of growth trajectory, we can see here that it's completely oversold, completely. So then that's when I'm gonna go, hey, I want to profit off this. I want to make some money. So then how do we do that? In my particular example, we would go here to options. And then in my case, I'm going out to 2024. And it seems like here, and now you guys might be so confused looking at this. I know I was. So I'm gonna bring it to the Excel sheet, and I'm just gonna type it out for you, so you don't have to get all confused and stuff. But again, please use these resources. That one was free. This one isn't. All right. So let's say we decide to go with this one. It will most likely be on, like, say, February 1st. right? In this case, it's going to be this. We're going to do it through TD. The strike is going to be at 3. The expiration date is going to be at this. And most likely the premium will come out, and let's just say we're going with that number. Let's just do 225. Again, we gotta take out some of the fees, so it's actually probably going to just be it's going to be this minus this. All right, so that's roughly what's going to come out to. The collateral will be about 300. It'll be pending the date close. All right, and then now we'll just slide all this down. And then in this case, the dividend. All right. So in this case, right, we can see here that something pretty crazy is going on. These people are so afraid that they're willing to pay 75% up of basically up to 75% of this entire investment, right? And I already think it's at an amazing deal, right? I'm willing to pay $3 per share, which in this case we're buying 100. That's why the collateral is 300. So in this case, they're willing to almost give me 100 or $225, and that's going to almost come out to 75%. And as we can see, this is the daily return, and this is the cash flow. So now you may be asking, why the hell are people willing to even pay that? Like, this is insane. It's all because of how bad things have been recently. If you look here, look at this just overarching downtrend. People are afraid. People don't think this is going to keep, no one thinks this is going to go up. They're so caught up in just the selling tsunami that these people are so afraid they're willing to pay up the ass for insurance. So that's where we take advantage, because now think about it like this, right? We'll bring you back to the thing. This says ROI, but this can also be labeled downside protection, right? And all that means is, in this particular example, right? We'll just put it back. In this particular example, right? I put up $300 in my capital. I receive almost $225 of it, which means I really only put 25% of my investment at risk. You know what I'm saying? But at the same time, I'm willing to pay at this price. So I'm not really worried about it, because I, again, have till 2024. In most cases, people are going to say like, oh yeah, but your money's locked up and all this other stuff. In a hindsight, it is, but at the same time, I can take it out whenever I need to. I can unlock it. Again, for users that don't know what I'm talking about, there are ways to get out of an insurance policy that you've created, just so everyone knows. But again, I'm just showing you potential profits. This is one I'm going to try to be getting on soon. And as you can see, it's pretty good revenue, or should I say cash flow. It's almost 75% ROI on investment. So please learn more about options, learn more about just the cash flow side of it. Again, it can really help downsize and limit your risk, and at the same time, it can also help you make some good money. This is just what I'm doing. Hopefully you got a okay idea. I know I went through everything like fast as hell, but hopefully you got a good idea of like what kind of bets you're going to want to make, because it's really about limiting your risk, because you want to preserve your capital, right? Like, we're not here to lose money. That was my main thing. I wanted to learn how to keep my money, preserve it, but also have it grow or create some sort of cash flow. So using this strategy, it really helps, because it allows me to, one, maintain my capital and preserve it, and two, it allows my cash that's already there to generate more of it. So I think that's really powerful, and hopefully you guys learned something. Thanks.